With, I suppose, the volatility that we do see in Bitcoin, how do you mitigate the potential for downside? Because again, you mentioned the halving and you mentioned what's happening in April, and I would imagine because you are a listed entity, obviously your shareholders, the people that like investing in you, obviously would have these concerns. That is there any way to mitigate even further, much like a number of commodity players do in terms of hedging or the like, in order to offset any kind of downturn in Bitcoin, or you just have to live and die by the price?
Well, you kind of have to live and die by the price. Yes, you can hedge, but hedging is an imperfect science. So, for example, one way to hedge that Bitcoin miners will do is they'll sell covered calls on the Bitcoin that they hold. Well, if you had done that a month ago, you likely would have been called out because Bitcoin has gone on this run here the last few weeks. That would have, caused those options, call options, to get called out. You can also put puts to protect you from the downside, but typically those are priced so far below where Bitcoin is actively trading for them to be attractive that you're going to lose 30% of the value of your Bitcoin before the put comes into effect. So miners tend to be a little bit more like wildcatters in the old oil business. Marathon has a huge balance sheet. We're the second largest public company with Bitcoin in our balance sheet. Now the ETFs have actually surpassed even Michael Saylor and MicroStrategy, which just goes to show the success that the ETFs have had. Even with the outflows from Grayscale, you've seen BlackRock and Fidelity really scoop home the majority of these ETF sales. So, which all bodes very positively for Bitcoin, because now you have institutions actively coming in, and in conversations we've had with some very traditional investment funds, they're basically saying, for our initial exposure to Bitcoin, we're very happy investing in ETFs and maybe a little bit with the miners for a little bit of added beta. But the good thing with the ETFs is it's made Bitcoin approachable for a lot of people now. You don't have you don't have concerns about security and who's going to hold it and how am I going to hold it and how am I going to buy it? Do I have to sign up on a crypto exchange? No, now you can just go to whatever broker you use for all your trading for your fund, and you can just say, hey, I want this many shares of this ETF, and now you have exposure to Bitcoin. So it's very attractive.
See, I wanted to take this in a different direction. I wanted to talk about energy prices with you, and I've seen just today you're managing Africa expansion, but because you mentioned the ETF, are you not concerned about the fact that once you do have these ETFs, and we're not talking about, the Bitcoin trading as its own standalone asset, that you're just going to get a lot of these derivative products that are going to be jumped on the back of it, whether it be, inverse or inverse leverage ETFs or levered ETFs, and then it sort of puts you in a poorer position as a miner, because you're going to have to deal with the zero DTE crowd coming in and just all of the nonsense and shenanigans, and especially a highly volatile asset like Bitcoin. Does that concern you or worry you at all? That it just opens the door for even more of that?
I think Bitcoin has always been a market where you've had, few people have been able to drive price, because at the end of the day, there are really fewer than 3 million Bitcoin sitting on exchanges at any given time. So it's a fairly thinly traded market. The ETFs are bringing actually more liquidity to the market. So it's a very good thing. And if you look at Bitcoin volatility, over the past 10 years, it's steadily decreased. And so I think that this will eventually behave a bit like gold does. You don't see the gold miners fretting all the time. You see all of these derivatives on gold that exist, and I think you're going to see all of those plus some things that we haven't even conceptualized yet happen with Bitcoin and other cryptos, which will only bring, again, more liquidity. And over time, I think what you're going to see is, because there's a finite amount of Bitcoin, and we've already mined roughly almost 20 million of the 21 million Bitcoin, you're in a situation where it's not like many other commodities or equities where people can just issue more stock or you can mine more gold or pump more oil. There's only a finite amount of Bitcoin. And so as more people want to hold it, what ends up happening is it just drives the price up. And so people trying to manipulate the market, when you start getting the bulk of Bitcoin being locked up in ETFs and long-term holders, historically over the past year, over 60 to 70% of Bitcoin has been in long-term holders' hands, as opposed to traders. So what that does is that limited amount of liquidity on exchanges has been able to be used and drive volatility. But over time, what's going to happen is there's going to be a flood of liquidity in this market. And I think it'll be a very mature market, and it'll behave very much like gold does, but with still a bit more beta to it.